Hey everyone, hopefully having a good day. My name's Andy. My channel's Finding Value. Today I'm going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it. It's generally related to three different topics: wealth building, commodities, and/or financial topics. Let's dive right in, take a look, see what's going on today. If you want to follow me, it's at @Finance, and if you want to join our community, finding-value.com, where I dive deeper into all this stuff, all the sectors, topics. I do this by giving midweek updates. Generally, late Tuesday is when I release those, or early Wednesday. I also answer your guys' questions on the weekends through what's called a question and answer session. Those either occur on Saturday or Sunday, and you can ask me questions directly. There's a lot of people who send questions before, and then I answer them during the Q&A session. If that sounds like something that you're interested in, try it out. We've got special coupon code where you can get 50% off the first month on a monthly membership. It ends up being $25 for that. And you can sign up to the yearly membership whenever you'd like from the monthly if you want to. And you get a $100 discount for the yearly membership. All right, so diving in, we've got Sam Gatling here, and he's another chartist. Looks like he's with the All-Star Charts group. He says, nobody's talking about this momentum thrust in rare earth and strategic metals. Well, we caught the bottom of this, literally April, May in this general time frame. Actually, let me go back here. Let's take a look. So this is, let's go candles, back it out. So there's April right here at the bottom, and then it would be April to June in this corner here is where, at least on the website, we got bullish there. And this is where we started to look for opportunities. And this is a falling wedge into a double bottom, which a lot of us are familiar with. There's another company that we entered, just to give you guys examples. MP Materials. This is a fractal that I grabbed. Delete that out. MP Materials is one that we had the falling wedge on, and then the bottoming pattern was down here. And this was the resultant of that. Now, not everybody partook in it. I got pretty bullish in this general section there, and we did have to ride through a little bit of volatility in the beginning of this, and then we had the launch later on. But there's lots of opportunities right now that are very similar to this that are still in this region down there. When these things start to move, people start talking about it in the like on Twitter and on social media. And the technical guys, they generally buy a little bit later. They wait for clear breakouts. They wait for momentum, aka momentum thrust on a 3 months change. I try to get in there real early using a different method. So I will live with some early volatility. I'll cost average into positions, and then I wait for the big thrust higher afterwards. Another thing that you can use for, I'll say for confidence, is gold. Gold front running all this and moving higher is our leader. So a lot of people will say, well, the charts haven't broken out. Gold's your leader, guys. If gold's breaking, look for laggards. Look for lagging companies where you can find opportunities in other sectors that haven't broken out yet that are still bottoming. That's what I'll say there. But we played rare earth metals. I think it's a great area to be looking at. I think there's a ton of upside asymmetry in the rare earths. Traditional money, it says owning just 50 ounces of silver puts you in the top 10% of holders worldwide. 500 ounces, you're in the top 1%. And 5,000 plus ounces makes you part of the ultra elite of 0.1%. So this is silver you need to own to be the top percentages. Now, I guess I'm a little crazy then, but top 10%, top 5 is 150, top 1 is 500, and top 0.1 is 5,000 plus ounces. Um, the way that I view physical metals is a lot different than everyone else. In a declining interest rate environment, the portfolio to have is what's called a 60-40 portfolio. 60% equities and 40% bonds. What I think has occurred in 2020 bottom turning up from 2021 and 2022 and the breaking of this downtrend here. I'm going to get it so you guys can see it. This here is a different environment that we entered here. So when I look at a 60-40 portfolio, I view it as 60 more, not really 60-40. Let's just say more exposure to commodities and a lot more exposure to physical metals. Your physical metals are replacing bonds and your commodities are replacing some of those equities. It doesn't have to replace all of them, but it replaces some of them. And that deals with an increasing interest rate environment, which means money is rotating out of financial assets. This also occurred back in the 40s, all the way up to 1980. And you know what else did really well during that time frame? Silver did. So this is silver on a log chart, looking on a big picture view here. So what happened is in the 40s down here, it bottomed out in a double bottom. We broke the downtrend. We created that double bottom like we saw in MP materials and also in rare earth metals ETF. I buy all through here, and then that's the big bull market that ensues. If you look at this here is actually a cup and handle pattern. This one here, back in 1958, all the way, or 1858, sorry, to 1968 was a big cup, and then there's your handle. We have another cup and handle pattern. And then this move here was an increasing interest rate environment, and this move here is going to be an increasing interest rate environment as well, in my opinion, when we finally break out of this. So I think everything is well set up for silver to do incredible things. Now, what I did is I recognized it here, which is this falling wedge and a double bottom. And I bought a whole bunch right here, and I've been sitting in it the entire time for basically my bonds. And that was in 2018, if you want to know exactly. And yeah, I owned a little bit before that, but I really loaded up in that general time frame. And then I swapped it to other things like platinum. Platinum's got, again, that look that I really, really like. Again, this is your consolidation here, breakout, consolidation, and we've broken out. So this is the way forward that I think these big, huge breakouts is where I'm looking for outsized returns. So live at the bullion bank boardrooms, emergency long weekend meetings. I'm telling you, this is it. This is it. That's in the big no, is it the big no, that's the margin call or yeah, I think it's called margin call or big short. I can't remember which one it was. Margin call, I think. That's what that one is. It's right before the 2008 crisis. So is this it for silver? Is this the thing that we need to worry about? Well, we can look at the chart here. It is breaking out. We do have a pretty big move ensuing here. And when silver starts to run, it can go vertical, where you don't really get a lot of big pullbacks. So if someone were to ask me, Andy, what would you be doing right now? Well, I would have already purchased my physical metals. I would have already purchased positions in silver mining companies, and I would be sitting. and watching this and just waiting. Would I be worried? No. I think all tailwinds are at our back. I think a lot of people are going to sell too early. I think they're going to screw this up for the most part. But these things are all starting to go into launch mode. And we could see some pretty big moves across the board in precious metals, in commodities. Watch the dollar, watch for that dollar to break lower. If the dollar breaks lower, it's going to launch these things. And there could be other factors that speed this up even more, like people getting worried, interest rates perhaps on the long end shooting higher across the board, and people's unwillingness to buy bonds and shifting bond money into precious metals. And this is going to be a very big potential move here. So get ready. Gold's heading higher too. So is this it? It could be. It very well could be. And what does that exactly mean? I don't even know, guys. I don't even know. Um, if this is it, maybe it goes vertical. Maybe this is it when it really goes. I don't know. I'm not here to tell you and pretend like I know like this is the vertical moment, but there has been uh, similarities between Weimar Germany and the way that gold was moving during Weimar Germany and where we are today is located right before gold goes vertical. So I don't want to say that I know that, oh, this is it. I already prepared and I'm just sitting and waiting and watching, obviously. Are we at the beginning or the end? This here is gold versus the S&P 500. We had a big breakout move in 2000, 2001 in this ratio, and we had a big follow through move where gold outperformed the S&P 500. Recently, we have broken out, gold has, against the S&P 500. And then I think we're going to see a big move higher with gold outperforming the S&P 500. Now, gold is our leader. Gold is our leader, and commodities will follow next. So we've got a big band squeeze here. We've broken out, and this is looking pretty good. It's looking pretty good from a ratio perspective. It's looking good on a dollar-based perspective because these are all priced in dollars. And what we're measuring here isn't the value of gold per se. It is the value of the dollar. And then if they lower interest rates, guys, or try to, watch the long end of the curve. The long end of the curve could shoot higher with interest rates. It could. If it does, I would be watching gold and silver. I think we're going to go, we could go vertical goose. We could. We could do that. And what that is, it's the market fighting against what the Fed is doing. The Fed could be caving in for political pressure. They could try, lowering the interest rates on the short term. But if the long end goes and they lose the long end, where rates really start to move to the upside, money will rotate into other things. And that's exactly what we're seeing. This is the money rotation event that's occurring. This monthly candlestick from the junior gold miners is incredible. And again, new multi-decade high, and here we are breaking higher. Everyone notices when things are breaking out. That's when they post these things. Your entry points were here and here. Draw a trend line through here. You broke the downtrend. This was a really low risk entry point here. Late 23, early 24. Another one was 2022 if you had the cojones to get in and start to cost average in. We're probably going to run here. Now, people, on the website, and I'm trying to push this, but we purchased a bunch in this area where individual companies were bottoming in double bottom patterns. And we are up 300, 400, 500, 600% on some of these plays. And I think they're going to go up drastically more. Now, I know everyone is focused on gold and silver right now. I understand. There are opportunities in other sectors that people aren't looking at. that people aren't posting about. And that's where we're ninja buying. So we're ninja buying other asset classes right now, where they're going to do similar things lagged behind gold here. Some of them are ultra leveraged. I would say a lot of the junior, silver and gold miners, they're pretty leveraged. Don't get me wrong, but there's other sectors too that are also highly leveraged in base metals and other areas that look very, very good. Come down, uselink, inflation divided by DXY. So when inflation breaks out and starts outperforming the DXY, is also when gold starts its massive move. We are currently at the cusp of a massive 15-year breakout for inflation over the dollar. So generally speaking, when you're in a certain market condition, the DXY will go up because it's in a low inflation, low interest rate environment. As inflation kicks up and as the DXY starts to head lower, which is a combination of those two things, you're entering a different market condition. That market condition favors gold, silver, and commodities. If the market condition is strong enough and inflation is strong enough and interest rates start to go up and hit, let's say, critical levels, 5% or greater on the 10-year, you'll see a headwind, obviously, in bonds because that's why interest rates are going up. But that can also create a headwind for financial equities like the S&P 500, NASDAQ, probably Bitcoin too. I'm not exactly sure. We haven't gone through one of these cycles with Bitcoin in existence. If that occurs and then they get a headwind and they start selling off, then money is looking for outperformance, and those asset classes are underperforming, both the S&P, the NASDAQ, and bonds. That's where the biggest gains come for precious metals and commodities, the largest in history. And we're entering that market condition right now. Narrative, oil glut. Reality, oil floating storage is down sharply. So what they're doing is they're just transferring inventories around. It's basically an accounting mechanism. So they're sucking it out of the oil floating storage and then just trying to hide it wherever they can. I think there's going to be a problem in oil here. Out in the future, obviously. We're just getting started. So this is the mining industry as a percent of global equities. It's at record lows right now. This is an opportunity. That's asymmetry. It is large upside potential, small downside risk, and we're basically breaking every chart I've shown for mining companies and also for the metals that they sell. So yeah, I think this is a great opportunity. Absolutely fantastic. And the ratio of gold miners versus gold itself, or silver miners versus silver itself, the ratios are really, really low. They are very, very prime for a big move higher. Kobayashi letter says the UK's bond market is collapsing. Today, the yield on a 30-year bond in the UK rose to 5.64%, its highest level since 1998. Yields in the UK are now 15 times higher than they were in the 2020 low just 5 years ago. What is happening? I'm not going to go necessarily into what they think is happening, but I'm going to tell you this is what is causing money to rotate into gold. The UK 30-year bond yield. Now, when bond yields go high enough, they're going to put pressure on stock markets. I can't tell you the exact timing of it, but if they continue higher, they're going to put pressure. And then when that pressure gets applied, you've got pressure in the bond market and the stock market simultaneously. Then money's going to rotate out. It's going to buy precious metals. It's going to buy commodities and hard assets. It's going to seek safety. And then eventually it'll be FOMO. So at first it'll seek safety because when losses are applied to accounts, people move money. And then when people move money, they look for alternatives. And when they look for alternatives, money funnels towards alternatives and the amount of alternatives that are available that work. So at first, what happens is the bond market starts to sell off. That money looks for alternatives. And if the stock market, the stock equity market, like the S&P 500, NASDAQ, if it works, then money goes into there. and it may go into precious metals, and it may go into commodities, all at the same time, depending on how much money there is. As rates continue higher, less and less options look good. Overvalued stocks with high PE ratios, high price to book, and high price to sales start to look unattractive as interest rates continue higher. Bonds are being sold off, so then money rotates out of bonds and stocks, financial assets, into hard assets, commodities, precious metals, and that stuff. That's the cycle, the big long-term cycle. And that's what gets me the most interested. So what we're seeing is hard assets are putting in these big bottoms and starting to break out. Copper miners are breaking out, COPX, breaking higher here, 52-week high. That's the money rotating. That's what we're doing. And what we're doing is we're buying all these bottoms here on the right-hand side. We're trying to get as low as we can and buy patterns to partake in money rotation away from financial assets to hard assets. I'm in some oil group chats and they're all talking about gold. Might be the time to re-up on the exploration production companies. We've already been doing that. We've been doing that. That was months ago, guys. The bottom's already in. The bottoms in oil and energy services, for most of them, are already in. And people just don't know. They don't care. They don't want to buy bottoms. They don't want to make a bunch of money, I guess. I don't know. They want to go talk about charts that are breaking out. Livermore accumulation cylinder. This is the uranium futures monthly chart log scale. 1, 2, 3, 4, 5, 6, 7, and it's ready to burst as a Livermore accumulation cylinder there. So that's looking pretty good. There are a bunch of the Livermore accumulation cylinders across the board in commodities. Some are far bigger than uranium, if you didn't know that. Some are far bigger than uranium. And I know some people are going to be like, well, what do you mean? No way. I don't believe that. It is. There are some out there that are big. The Great Marquis. So this is It's Begun. What this is 10-year bond yields, and they're all going up. All going up. So when they go up, they're going to hit critical points where financial markets are not going to like it. I'm not going to tell you that exact amount. It's roughly around 5% for a lot of areas. If these keep going up, and you're going to see precious metals start to kick it into gear here. But if they go up to a certain level and break, we'll call it a crucial or critical levels, then stocks are going to start heading lower. And we may already be at that point. I'm not going to say that I know the exact turning point, but I think it's coming. Something's brewing in energy. Here's Oxy breaking its downtrend. You know what it likes? Inflation and high interest rates? Energy does. You know what's cheap? Energy. You know what's breaking downtrends that people aren't looking at? Energy. You know what I've already purchased? Energy. I mean, once you see the cycle, you can't unsee it. And then once you believe in it, that's when you can take advantage of buying bottoms. You have to believe in the bull market, believe in the cycle, believe in the ratios, believe in the technicals, and then you get this alignment that only occurs once every, I'd say, 20 years in commodities, but it's like 10 years on the cycle where commodities go up, and then in 10 years it cycles into financial assets again. But I'm not sure that that's going to be the same going forward. These could be long burning bull markets if the interest rates continue higher for a long period of time. Here's Moo breaking out of its downtrend back to support. This is one that I do on the daily updates. And here it is heading higher. This is a kind of a shoulder, head, shoulder pattern that we got. So the shoulder over here, the head, and the shoulder that is being created against resistance right now. Now this shoulder doesn't have to be the same length as this. It could break out at any time. So don't pretend like things are going to be matched perfectly. They don't have to. And there's not much volume up here. So we don't have a ton of overhead resistance. Another one from Sam Gatling. He says, the leading indicator for the housing crisis in the 2000s is flashing again. Well, it may or may not be. We are the 2005 area for lumber versus gold is a different cycle. It's a shorter term cycle, the real estate cycle, and gold right now is a viable alternative to bonds. And back in that area of 2005, we did not have uh, interest rates going up like they are today. So, could there be uh, increasing inflation at the same time that we have a slowdown? Yeah, that's possible. Stagflation. Uh, could there also be that gold will outperform lumber even in a housing bull market? Yes, that is also possible. Where inflation is so bad that people start running into safety, quote, safe haven asset, gold. The market conditions could be different than the market conditions in 2005, but still have this outcome be the same. And that's what I am basically saying. '05, we saw home builders, they had topping patterns. I can show you right now. So here's Lennar. So in Lennar, we were putting in a shoulder head shoulder topping pattern here. 2005 was the complete peak when we rolled over. '06 was another kind of bounce, and then we broke that pattern to the downside. This was topping out for home builders. To me, this doesn't look like a top. This looks like it's ready to continue higher. So when I look at data, I'm grabbing it from the internals of the market. And then I'm comparing it to, quote, people doing other charts. So what I want to look for is alignment. Home builders, if we are going to get a recession like 2006, 7, 8, like that type of recession, you'd see home builders already falling or putting in topping patterns. That's not what we're seeing. I think that home builders are actually going to launch to the upside, and that lumber to gold ratio here is more of an anomaly. It's a different market condition. I think gold is just outperforming everything right now, and people are front running what I think is going to be a very bad inflationary outcome. And that's all I've got for today. So we're going to end it there. Give me a thumb up for the content, subscribe to the channel, subscribe to the website if you like. Specials at coupon code, and that's all I've got for today. So we'll catch you next time. This is Finding Value.